Today we have Grant Payton, Sales Manager with MyFarm Limited, in to talk to us about New Zealand agriculture and how things are being affected in that sector currently. Welcome, Grant.
Thank you, Ian.
Farming in New Zealand is currently producing strong returns. What are the key drivers?
There's a couple of contributing factors to that at present. One is obviously our low-cost based system or model, which is pasture-based, high productivity, and obviously as a result of that, good margins. The second of that is the growth in the developing markets, particularly Asia, and in particular China. We're seeing production growth there, we're seeing population growth, increased urbanisation, and changing taste to a more Western style diet, and more importantly for agriculture, a change to protein-based diets. So all that's leading into what we're currently seeing in record payouts, and that's flowing through obviously to the farm gate. Under our own model of a 650 type payout, we were seeing returns of 5 to 7%. Under the current payout, those returns have lifted by about 4%. So we are seeing farms delivering returns of in that 9 to 11% bracket.
Do you see the returns being sustainable, and why?
Yes, we do see the returns being sustainable, provided we focus and remain focused on our core competencies of a pasture-based system, low inputs type system, and really driving those marginal returns through the farm gate. As those markets continue to emerge, and all signals are that they will continue to grow, we're seeing changes in policy in the likes of China through removing the one-child policy, as well as changes in the farming models through China, where they're removing or making it less attractive, if you like, for those historical 2 to 3 cow farms. So China has seen a major reduction in milk production, and as a result, New Zealand is directly picking up on some of that opportunity.
Dairy numbers are well up on past years. Is this just increased cow numbers, or has our production increased?
It's a combination of both again, Ian. So we've seen a number of conversions in the last 3 to 5 seasons in that Canterbury, Otago, Southland region. But we're also seeing the benefits of science through our system with the likes of increased productivity through breeding improvements, pasture improvements, a lot of effort going in at the management side and making sure we've got a good long lactation or a long season of milking. And so it's a combination of all the above, but we are certainly seeing significant improvements in this season alone. It's estimated to be an 8 to 9% production lift across the industry. No doubt that's assisted by last season's big drought, so, but nonetheless we're still seeing productivity increases, and we'll continue to see that as dairy develops further.
You mentioned there improved pastures and the likes. That to me is a great part of the whole agriculture sector, is the science. How important is science to dairy in New Zealand?
Yeah, look, science is crucial to dairying in New Zealand, to agriculture in New Zealand really. A rule of thumb is farming is really about land plus capital plus science. So farmers in general have always been known to be innovative. Provided the science is coming through, they will take that science, be innovative with it. And particularly as we get into the likes of environmental challenges that we have on farms, nutrient management, science is becoming a crucial part of that equation.
With the increased dairy cow numbers, we've seen a big drop in the sheep numbers. What sort of future do you see for sheep and beef in New Zealand?
Look, that's a mixed bag, but I suppose in short answer to you, we see a big future for sheep and beef farming in New Zealand. In the South Island, with the conversions we've talked about previously, we're seeing a drop in sheep numbers, particularly as a lot of those sheep and beef farmers are going to dairy farming or dairy support. In the North Island, the Northern Manawatu, Rangitikei, up into the King Country, we see massive potential. We have 5 of our own farms through there, which we're seeing productivity lifts of between 30 to 40% on those farms. So on one hand, we're going to see a shrinking sheep number, if you like, in the South Island, but I believe we'll see an increasing number in the North Island in those key areas.
Traditionally, New Zealand farming does not generate strong cash flows, but farmers tend to have in the past made their money when they sold through capital gains, basically on the land. Do you see that this is still the case and likely to continue?
Yes, we do, and if perhaps I break it down to pre-GFC and post-GFC. Obviously, pre-GFC, the farming model, if you like, was high debt, borrow as much money as possible, buy as much land as possible, and all income generated from that, or profit generated from that, was put towards debt servicing. And obviously they rode that capital growth story. Post-GFC, what we're seeing is far more focus by farmers and investors in lower cost or lower debt models towards farming, and as a result they're driving towards cash. I know our investors are demanding cash and expecting cash out of the business, and so it's the old story of cash is king. And so certainly we see that continuing, and will continue to drive cash out of these businesses rather than capital. We do still believe there will be capital growth though, and particularly farms that are in good locations can drive productivity. It will be linked to productivity. If you can't drive productivity, I don't believe there will be capital gain. Where farms are driving productivity, we will see capital gain.
Well, those are pretty sound business principles you're talking about there, Grant. So farming is a long-term investment in what I call real assets. Does this mean that investors have to be farmers, or are there professional structures being set up to allow investors to, or other investors should I say, to participate?
Yeah, historically it's probably been seen as a domain of farmers. Latterly what we're seeing, and obviously we've set up a business around this, is means and ways of introducing other investors to farming. As that becomes more common knowledge, if you like, that there's access to land and to farming, and particularly to New Zealand's biggest industry, we are getting more and more of a mix of farmer and urban investors. And often that mix is very complementary to running a good business. You've got the urban investor asking the farmer investor to justify certain decisions on farm. And that's actually, like I say, comes out with some good principles and policies, and drives good governance of these businesses.
Sure. Being long-term assets, how liquid are these investments in these structures?
And a good question. That's probably been one of the downfalls of farming and access to farming, is people's concern about their liquidity. And certainly private syndicates have probably found liquidity very difficult. And that's driven on the base that they don't have the access often to people to buy out other investors should they want to get out. So in our own business model, what we're finding is we're creating means of liquidity through different investment options. So there's ways of getting in at a lower investment level of around $20,000, and so that's actually opening up a new pool of investors that can assist with liquidity. At the same time, we've got new tools or means of getting in that people can talk to the likes of yourself about to get into these businesses and out. So there is more money washing in and out. And certainly, again, through our own business, what we've been able to drive, or what we've seen in the last 12 to 18 months, is we've been able to sell and on-sell up to $12 to $15 million worth of shares in these farms. So liquidity's there, provided you've got the infrastructure and the resources to tap into it.
Look, we're very pro-New Zealand and things like that, but if you boil it down, what is the advantage of investing in New Zealand farming or New Zealand agriculture as against other countries, for example, Australia, the US, South America?
Yeah, and a number of farmers have been offshore and tried it. Ultimately, the advantage to New Zealand agriculture is our temperate climate. Comes back to those basics of farming, a low-cost model, grow plenty of grass, put it down a cow's throat, and keep those costs down. The reality is offshore, some of those environments we think are close to temperate. The reality is there's greater extremes, and so that has created challenge for a lot of farmers going offshore or investors. So certainly in New Zealand it's a low cost advantage, coupled with the fact we have a big company such as Fonterra, which is a global leader, and couple the fact that we've got critical mass. It's New Zealand's #1 industry versus Australia, which is, at a guess, 12 to 13. And so the industry based around it, which allows it to be successful.
Yeah, well, that's all good news, and I'm sure it's going to continue to rain, and we're going to continue to grow grass. You mentioned Fonterra, which brings me to our next question. Is over the last year or so, we have actually seen some milk scares around safety and food safety. Do you think this is affecting the New Zealand's quality reputation abroad?
Yeah, and I'm not too qualified to answer that, I suppose, Ian, but I can discuss, in discussions with international investors and New Zealand investors who deal abroad. They've indicated that the media beat up in New Zealand is pretty much limited to New Zealand. Internationally, the media and the perception of Fonterra has actually been very positive for the fact that they have come out and told the customers that they have a food safety concern. In some countries that's been rather foreign to them, and so they've actually been seen in a very positive light. That's evidence in the likes of the global dairy trade auction. We were actually seeing future price for milk powder actually increase reasonably significantly since that food scare, and so that and such indicates the market still has a lot of confidence in Fonterra and New Zealand product.
Yes, well, I am aware that Fonterra take it very seriously and have appointed some very senior management to be in charge of food safety. Look, given the rising cost of land across New Zealand, is there an issue in injecting new blood into the sector?
No, I think the new blood actually presents opportunity to the sector. Certainly we're seeing that in two parts. You've got the investor new blood, and then you've got the workers new blood. So the investors new blood, there's a number of investors who bring in capital that may not otherwise be available. So we're seeing that particularly in the likes of sheep and beef, but equally in dairy. From the workers' point of view, we see a number of international workers in key areas that we're involved in Canterbury and Southland, and they've been, within reason, very complementary to the New Zealand workforce, and in some situations a bit of a saviour to certain areas where it's been difficult to attract labour. And so what we're seeing now is a number of syndicates, whether it's private or corporate, which are recognising the value of these workers and assisting them to grow through the system, to the point where some of them are assisting to back into farms. And so there's a number of these syndicates which like to actually see someone come in at the bottom and out at the top. So it's actually very complementary.
Well, Grant, my final question today is, do you see an increase in the environmentally responsible farming practices in New Zealand?
Yes, we do. Yeah, absolutely. It's becoming a major issue, if you like, within the dairy sector. It will be something which will slow down conversions. There's certain areas which they're putting nutrient caps on those regions, and as part of that cap, those regions are going to have to manage which farms get access to some of those nutrients as such. So it's definitely going to have an impact. We need to reduce our environmental footprint. That's well publicised, and that's where science comes into play again, and it's that science that's going to assist and help lead New Zealand agriculture into its next stage of growth.
Well, I for one have been one that likes to get down to the field days each year and have a look at what's going on, and the science that I've seen there over the last 10 or 20 years that's come through to help the agriculture sector has been amazing and certainly global leading. Overall, this all sounds very positive and a positive outlook for the New Zealand agriculture sector, and we've heard recently that the milk is called white gold, so here's hoping that it continues. And of course we have the likes of MyFarm, who specialise in farm syndication. That allows investors the opportunity to invest in farms without having to own a complete farm. This all sounds wonderful for the future development of our country. If you'd like to know any more about any of the issues raised in this interview, please contact us at SAG Private. In the meantime, thank you, Grant, for coming in. We look forward to talking to you sometime in the future. Thank you.
Thanks very much.